Hi, welcome to the Market Alert for Friday the 23rd of September 2016. So yesterday's session, we saw the market put in a sell signal after the recent move to the upside. I'll just wind this back so you can see that the first part of the session there. We had one or two bits of news, and then of course we were waiting for Carney later on in the evening. So the market came down eventually, and you see it hit the scalp, and I sent a note out saying that I wouldn't bother for the remainder of the session, and that was seemed to be the right thing. However, that said, later on in the session, because this ends shortly, so I turned everything off and decided to walk away. It was just trading sideways. So the full picture is this, and so later on in the evening we got Carney speaking. This is 19:15. I don't know what happened here, but something came out, sent the market 50-60 points lower, and then the market tried to bounce back, but like I say, it was already stuck in this sideways range for a long time before this came in. Of course, they just brought it back to where they wanted it anyway. So the market's been sideways ever since, and in the daily chart we've got the market higher for yesterday, but now you can see the market struggling a bit there as well. And again, news-wise, we'll just have a look in a second. So it's a brief market alert this morning. Absolutely nothing this afternoon, so unless something comes out of nowhere, then expect the market to be fairly quiet. On the news front, a bit more news. Deutsche Bank managed to rally yesterday. This came back up to 11.64, but do note on zero hedge, German politicians are getting nervous about Deutsche Bank funding issues, not making any profits because of thanks to Super Mario Draghi with his ZERP and NERP, zero interest rates and negative interest rates, having an impact on all banks' bottom line, because trying to lend money to good borrowers or credit-worthy borrowers, and of course they're not getting much on the interest back to keep them functioning as banks. So well done, Draghi, Carney, Yellen. The bank problem that we had in 2008 will never be cured when you've got zero and negative rates, because the basic mathematics is that you lend money at a higher rate to get an income stream, and also obviously encourage savers. And here you've got a situation where thanks to the central bankers, they're sending every bank into financial oblivion, and it's just a matter of time really before the whole lot unravels. It's not sustainable as a business plan. So yeah, keep an eye on this one. I know it's gone off the boil a bit, but just keep checking back on Deutsche Bank, because it could be the one. And also there was, I think I mentioned it yesterday, with the proposal that it could be bailed out by the state. And of course, as I said in yesterday's market alert, 47 trillion in derivatives is going to take some finding. Of course, that will be written off or ignored or something, and then I'll just keep the bank going. But bizarre, strange times. 1050 on the implied volatility. This has come down markedly, which you'd expect as the market's moved higher. You can see this in the chart here. The lower this goes, the better, but you know that by now. So that's it for today's market alert. Also for the week, I will let you know if anything happens later on today. Other than that, thanks for watching. Have a great weekend, and see you in the next one.